Welcome to Market Overtime on the Schwab Network. I'm Oliver Renick. When you move from New York to Chicago, there's two things you notice. The architecture is classic, and the traders are a lot different than the machines on Wall Street. Here at the corner of Jackson and LaSalle in downtown Chicago, a few institutions embody that balance between traditional and modern more than Cboe. I'm joined by Cboe's global president, David Howson, here on the trading floor. David, great to meet you. Thanks so much for having us.
Great to meet you, and thank you for coming back to the Cboe floor.
Absolutely. One thing you get told the first time you come down is Chicago Board Options Exchange, that's yesterday. Today is Cboe. And I think there's a lot in that. Tell me about the evolution of what you are today versus what traditionally people kind of associate you with.
Absolutely. Cboe has celebrated its 51st anniversary just this last April. And when you think about Cboe, where it started a couple of floors away from where we sit right now, 51 years ago as that options exchange, and then think about that all the way through to today, tremendous difference. There's been an evolution of product, there's been acquisitions, and now today we find ourselves running 27 markets around the world. We find ourselves in 7 of the world's top 10 economies, and those markets operate equities, futures, options, FX, and digital asset derivatives. And it's an exciting time for Cboe as we finished migrating our Australian and our Japanese equities markets only last year. So now as we move forward, we're thinking about leaning into those strengths. It's about that global footprint. It's about the technology platform that runs all of those markets around the world. And then it's thirdly, of course, about product innovation, which Cboe's been known for since its very first day 51 years ago.
I think there's a lot of things in there that you represent as well. When you talk about acquisitions, expansion, international expansion, you came through BATS. Tell me kind of at this point as the global president, how much of that international growth is part of the equation? How big is that?
It was a fundamental point in time for Cboe as it acquired BATS actually in 2017, and myself and a number of the other team members today came through that BATS acquisition. Tremendously important diversification for the company. Through that acquisition, it got the world-renowned BATS technology, but it also got a diversification into the equities market and the start of that global footprint, which from that point on, Cboe has continued to build upon. The important thing really with the diversification, not just technology, not just asset class diversification, was the ability to then begin to think about a data business. Many exchanges diversify into more recurring levels of transaction revenues, and that data business has really been the foundation of much of Cboe's growth since that point.
That's what's so interesting about this as an institution. As I mentioned, when I moved here from New York, there's just a feel that's different in the financial community because of the roots that still are here in the physical trading world, even as you're adopting services from the data side, international growth, different types of asset classes you're bringing on board. These guys here, though, still behind us. Tell me about the role they play and what they represent.
A fundamentally important part of Cboe since the very first day. The trading floor is a tremendous part of that global SPX and VIX options liquidity ecosystem. Anybody who has to manage equity volatility risk in the world looks to the S&P complex in order to do that. And this trading floor is tremendously important. We moved here 2 years ago in June 2022. We deployed a fantastic array of new technology and we expanded a number of the pits. We've got 10 trading pits today covering a variety of products. And the busiest pit, the largest pit that's just starting to trade over here right now is that SPX options pit. About 21% of all SPX options trades take place on this pit.
Wow.
The people who stand behind us are world leaders in providing liquidity and serving customer order flow. The tremendously important thing about the floor is their ability to price very large, very complex orders in seconds. And the care that a human being adds to that processing is tremendously important and really, really important when it comes to times of market stress. That price discovery that this floor offers is fundamental to our customers and is really why we continue to see growing demand for access and places and positions on this floor.
Some numbers of recent: $66 billion average of equities traded daily, 10 million options contracts. When you think about some of the services that these traders are providing, when you think about markets that are less liquid, you talk about the big hedging trades that need to be sort of bespoke. I also think about the commodity markets that are known for their volatility, that are known for their Chicago roots. How much of the COVID experience in that period that sent volatility surging in a way we hadn't seen in a very long time, and then also kind of reintroduced some of the commodification of markets with inflation that's proven sticky? How has that changed or impacted the last kind of 10 years of trajectory?
It's been really tremendously interesting. COVID afforded us a forced experiment. You know, what happens when, for health reasons, it's important for us to close down the floor. We closed the Cboe floor for several weeks, and we saw the liquidity patterns really fundamentally change during that time. The technology teams pivoted very quickly to add electronic functionality during that time period, but we just as the people standing here today, were really eager to see the floor trading reopen such that that really crucial liquidity profile could be brought back as a service to market participants.
There is this kind of notion, I think, that when machines take over, they keep taking over until everything human is gone. But as I think this represents, there is still some standing. Do you foresee any more thinning of the physical presence in trading, or has that basically been arbed by machines to the extent that they can do at this juncture, and that this is to stay?
Certainly for this liquidity ecosystem, we listen to our customers. We listen to our end investors and listen to the utility that a service and a feature and functionality like this provides them. And we see that just through these straight statistics. 21% of all SPX traded on the SPX floor. 43% this year is traded in the VIX options pit just over behind us over there.
By virtue of those numbers, it provides value. It must.
Exactly. So if there was a different, more efficient way, then believe me, the markets and the market participants would have found it and gravitated to a different utility set.
Do you think at all about current AI breakthroughs and what role that might have in further trader displacement?
When it comes to new technologies in AI, we're really exploring that avidly at Cboe. The first kind of beachhead for us, though, is in that data that I mentioned before. 27 markets, cross-asset class, global data set, the world's most liquid options ecosystem right here. And then look into new technologies, AI, machine learning, to really work out how we can provide insights and access to those insights on a democratized basis to a broader market participant set. So AI certainly got a huge part to play in our industry as we go forward, but always careful and measured steps of innovation to ensure that we have stable markets as we go.
Let's talk about Cboe as a business, as a company, a publicly traded stock, up about 70% in the last 2 years. Very strong performer in its category. And part of that seems to be a few of these big topics that people have latched onto. Zero data expiry, the digital world has been a role in some of the products. Last time we were here talking about the Bitcoin ETF, but the way it still funnels up to the top for revenue. 61% options, about 20% equities, 6.5% futures, 4% global FX. Walk me through how you see that kind of revenue breakdown changing.
Of course, Cboe started with derivatives, with options and futures in the early days, and the evolution of the lifeblood of Cboe continues to be derivatives and options, and that's borne out by the numbers. As we see here, the continued drivers of growth for Cboe will be that derivatives capability, the options and the futures, but also that data that comes out of there. We pivot the data across all of those segments you just mentioned, and that creates a tremendous value for us. We see that growing at around about 7 to 10% per year is our mid-term guidance.
Who are the big customers that buy that data?
It's a whole range. We've got sell-side brokers, buy-side, end retail users, and we talked about new technologies a moment ago, but the cloud plays a fundamental part in us reaching international customers. Yeah. Over 78% of our subscribers on the cloud are actually internationally based outside of the US.
Interesting.
44% of our growth of data in Q1 came from international participants. And then when we think back to that growth, the engine, that 60% from options, we see a tremendous amount of growth opportunity internationally. We've got a great lens at Cboe with our global reach, and we have global trading hours, which is non-regular trading hours overnight from a US perspective, which allows traders around the world to access this great liquidity complex electronically. 2 to 3% of SPX options trade in those global trading hours. When we look across at comparables, we see the percentage of trading during those hours in comparable products and offerings around about the 15% mark. So we see a tremendous amount of growth. It's been great this year to bring on a number of new retail brokerage platforms in the Southeast Asia Pacific region. So real diversification of customers and also a diversification of user base as they come towards that shorter end of the curve.
Does that international growth become a little cheaper if you don't have to buy businesses into it? If you're selling product, if you're selling data, it sounds like maybe a lower cost of expansion than having to go out and do big mergers and acquisitions that have been done in the past. Is that fair to say?
You're absolutely spot on, and it's what we talk to our investors and our customers about very, very, very often. Yeah. We now have a global platform. We now have a global footprint of human beings. We also have a uniform technology platform, which really in totality provides a scaled infrastructure that we can make incremental investments on top of at a low cost basis. That's great for us as a business to be able to move capability from one region to another, but more importantly, it's better for our customers. Our global customer base can avail themselves of capability in one region and seamlessly then move that to another region with a very low incremental friction cost and then pass on that benefit to their end customers. So from a customer-driven point, that footprint really sets us apart from our peer group.
Are there particular areas that you see as unserviced or that need financial data or the tools that Cboe is providing? Are there particular areas in the world that are most ripe for growth?
We certainly see the retail as a big growth area. We've seen it develop in the US over recent years, and a big driver of that growth in the US was the democratization, the access of technology and data and education. When you look at the broad-based statistics, the level of engagement of the US population versus the European or the Asia Pacific population in the capital markets is wildly different, really under-engaged in Europe and in Asia Pacific. And then when you think about the need for that social contract from governments to provide for old age, healthcare, that financial future, there's a tremendous impetus to become more engaged in the financial market. So that means customers need data. They need simple access to investment. They also need great education. And it's something through our Options Institute and networks like your own that we really major on getting valuable, balanced education out to the end investor such that they can work out how to engage in those financial markets.
It kind of seems like, in a way, a good way to sort of project or even track the need for the tools and services that you're providing is basically the amount of household financial wealth that's tied to assets, which we've seen go up. That's at record highs right now, that has since COVID surpassed what it was in .com. Do you view that as a kind of sticky, kind of to go a little bit macro here for a second, but do you view that as a kind of sticky fact of life now, that just more wealth will be tied to one's investments, assets, or are these temporary kind of moments or illusions based on high valuation markets, a lot of money that got pumped into the economy? How do you weigh that?
Certainly it looks more like a secular trend than a secular kind of blip in history when you look at the data. And indeed, when you look at the general levels of success of being a more active participant in your own financial future is bearing out in the United States, and we see that pattern repeating itself elsewhere in the world. And just look at the government actions. Look at Japan. That real push for moving its population from savers to investors. It's really pushing investors towards, or individuals to get that money from out underneath the mattress and actually engage in the financial markets. We've seen tax efficient savings accounts being brought into place in Japan. Those NISA accounts, tremendously important there. And then when you look at the playbook of competition that's played out in the United States, in Europe, and we see it happening now in Japan. At the end of last year, the retail online brokers moved to zero commissions in the marketplace to try and draw in more investors into the marketplace and increase that engagement. And we see that coming through in the figures.
Sure.
Cboe Japan in Q1 grew 72% versus prior year. Right. That was on the back of tremendous growth in the market in general, but also the need and the need for a viable, high technology, highly reliable platform in the region is really coming true.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
When you are expanding and particularly getting more connected to the retail audience and investor, and to that point about more of the financial wealth coming from assets, we've seen trading at highs, we've seen a sort of speculative fervor that meets also that kind of healthy balance of having long duration assets in your wealth that most people would encourage. Other people would say, well, you also have to be careful. How do you kind of maintain sort of ethically when you're building out new tools, what's going to be useful, what's helpful, what do I not want to overextend from a speculative side? I kind of think about zero-date expiry options as an example. Yeah. There's a lot of institutions that use these tools very proactively and effectively. There's also a lot of people, though, who are using them to gamble, who are making short-term trades. How do you kind of find that balance and make sure that what you're putting out there won't just get crushed in a cyclical downturn?
Certainly very important. Education is key. Education and a measured approach to financial investments and how you manage your portfolio. And there's a tool in the toolkit for everything that you might need out there. And options play a very particular part of that overall toolkit and should be used in certainly in the right way. What we've seen with the explosion of the trading in zero DTE trades, in fact, we're coming on the 2-year anniversary of filling in the Tuesday and Thursday expiration of those SPX weekly contracts. But what we've seen in the ecosystem through the data, and that we have the benefit that Cboe only sees all of the trading in the SPX options, is a really balanced flow. We've seen investors initiating trades in zero DTE in the zero DTE contracts on the SPX weekly contract. We've seen those be 95% what we would call capped risk or defined outcome. Okay. That breaks down into about half of that as long options, so buying puts, buying calls, and the other half in terms of credit spreads or complex strategies, which all have a defined outcome, a known risk profile at the time of entry of the trade. And so this provides a tremendously balanced engagement pattern for customers in zero DTE. And then when we think about the other side of the equation, the liquidity providers,
huge for them.
It's huge for them, but actually the flow that we're seeing across strikes is tremendously balanced. What I mean by that is balanced buys versus sell, such that the net imbalance the liquidity provider needs to hedge is tremendously small when you compare it to the size of the overall SPX complex.
So most people are using them to kind of set up guardrails for their positions. There's a portion in there that are directionally speculating, but for the most part, it seems like the data that you've got is capped loss positions and max loss known as you're putting the trade on.
That's right. It's a real diverse range. It might be systematic strategies. Retail we're seeing using very much more systematic-like strategies. We're seeing yield generation strategies. We're seeing tactical trades.
A lot of ETFs
general
using
hedging.
them.
ETFs, we've got a range of ETFs now that have expirations every day of the week. And the interesting thing there is that we see a very low level of what you might call gambling. I would call speculation. Any investment strategy
and
or
not
product.
To impugn, anyone can do what they want. But if there's a lot of people speculating, then there would be more risk in the cycles of the economy.
That's right. And what we see in the data, though, is that tremendous balance, and you can see that in the numbers, as in the engagement has only grown over time. We calculate based on the thresholds, and of course we can't see to the end investor. We calculate around about a third of the engagement in 0DT SPX options is from pure retail.
Interesting.
The other 2/3 or so is from non-retail, and that does include Protail, does include the institutional and the hedge fund side of the community. About 30%, around about a third is pure retail, and we see that real diverse range of strategies being deployed, which gives us confidence in the ecosystem.
How much do you think that the options volume that's increased dramatically, but then also the 0 a day particularly being used as a tool by both the pro tail, as you call it, and then the institutions in addition to the retail, how much is it changing the structure of how markets work? Because I've got guys that come on the show that are these kind of wizards of gamma that look for these kind of tide pools in the market around expiries and strikes, and they say this is maybe the driving force, if not a close second, to overall macro. Do you believe that? How much power do they have to change the way we think about what drives markets on a daily basis?
I think there's certainly information in the trading, information in the positions, and that's why data, again, has been a tremendously valuable part of what we've done here at Cboe. We have intraday open and close files that people can subscribe to know the build-up of positions throughout the day. For us, when we think about the data and how people use it, it's really important that they use that to define a larger base strategy. We have seen a number of strategies across institutional and retail come to that shorter end of the curve, but in terms of the tail wagging the dog, when we look underneath the covers, it's actually very balanced flow again. And so in terms of the weight of pressure of hedging, it's very small. And when you look at the size of that gamma that needs to be hedged by those liquidity providers, you've got a range of places to go. There's of course the underlying futures market, but what we've been hearing from customers in the last year or so, in particular the liquidity providers, is that they've been able to hedge the exposure back into the 0DTE contract.
Right.
The risk lines up, the size and the tenor lines up, and it all rolls off at the end of the day. So great utility using the actual complex in which you entered into the position to actually hedge the position all in one neat ecosystem.
We're filling in liquidity where there wasn't before, basically, in almost every form. And speaking of that, there's been some rumors that maybe a 24/7 year-round trading would be a possibility. Have you thought about that? And what are your thoughts on extending trading hours over the weekend?
It's certainly been a topic of discussion for a number of years. It's been really hotting up in recent months. We as Cboe, we have a global footprint. We have follow-the-sun methods for our operations of our 24/5 market, so we're 24/5, and so we could operationally quite seamlessly move to that. 24/5 to 24/7 is a different kettle of fish, and we'd really want to look to the true demand for the over the weekend trading. But when we think about the equities markets in the US, there are also some structural and infrastructure things that need to fall into place. That is the SIP, the trade reporting for the transparency of the trades and the quotes, 24/5 or 24/7 if we get there, and also the clearing and settlement. That all-important post-trade flow is critically important, and we know that the DTCC is also looking at supporting 24/5. For us, we do hear demand from our international clients for daylight hours access to the biggest capital market in the world, to the equity exposure in this country. So we do see that demand rising, but we're going to be continuing to talk to customers, liquidity providers, and the regulators about how we would evolve that into a efficient ecosystem. One point I would make is that we already open market at 4 a.m. on our EdgeX equities venue, and we have about 30% market share during that time. We do see solid active trading, so there's good lead indicators of the value and the need to have trading available during daylight hours.
Okay. I would be remiss if we did not talk some digital assets and crypto for those that are looking for new products. There's been rumors of options on futures. As I mentioned last time, we were here talking about the Bitcoin ETFs, the spot ETFs. How are you guys thinking about that as an asset class going forward? Is that an important part of growth? Is that just kind of go at it as it comes? What are your views?
The digital asset space we think is tremendously interesting, one that a global infrastructure provider like ourselves has got a great part to play in. We recently announced a realignment of our digital business whereby we'll be exiting the spot crypto market in the United States. And the reason for that was really that we struggled to see end in the lack of clarity that we're getting in terms of how spot crypto should be innovated and built upon in a US regulated environment. So for us, we came back to our core, we came back to derivatives, where we'll be coalescing our margined futures in Ether and Bitcoin back onto our CFE, our futures platform that houses VIX futures and our credit futures. So we get a single platform there for futures to build upon it throughout our own Cboe digital clearinghouse. When we look more broadly in terms of traditional wrappers, the ETFs, at $14.5 billion AUM now on the ETFs that list, those Bitcoin ETFs that list with Cboe. And there's also talk about, how might we get options on those ETFs, and that's another structural set of challenges we need to work through and complexities as we think about options on Bitcoin futures. And then of course, potentiality for options on digital on Bitcoin and Ethereum futures as well. And
those generally are things that you are waiting for further regulatory clarity on?
In terms of the derivative side, it's really more customer demand and the liquidity pool, and we'll go where our customers drive us. On the ETF, on options on the ETFs, yes, that's more of a structural and regulatory process that we need to go through to make sure we can do that effectively and safely for the overall ecosystem.
Bringing it back home fully to VIX, where I think as traders in Chicago, most of us still associate the floor here, the Cboe, with VIX. Plans for volatility tools and instruments. I know you just this week further partnered with MSCI. Close me out with a thought on how you're thinking about VIX and volatility and whether or not there needs to be new products in that suite or if it's sufficient as is.
We think of the products here at Cboe as a toolkit, a volatility toolkit. So you've got the SPX options, you've got VIX options, you have VIX futures. So we're always looking for ways to innovate and build around that ecosystem. We announced the dispersion index that we launched with Cboe and S&P Dow Jones indices last year. We're hoping to launch a future on that index in 2025.
That would be very cool. That's a good index, dispersion.
Really, correlation at all-time lows, dispersion at all-time highs. Tremendously interesting trading strategy. And the philosophy at Cboe from a product development standpoint is to bring the opaque, the complex, the capital intensive, the OTC into a standardized, listed, cleared environment for customers to be able to trade.
I literally used to have to calculate dispersion when I worked at Bloomberg and would talk about that as a metric a lot because it's a crucially important metric in understanding what's happening in markets, but it had never really been indexed before and tradable in a way, so that particularly I can literally confirm because I used to run analysis to try and calculate dispersion, so I imagine that will be popular for an institutional style of investor.
Certainly more aimed at the institutional side of the spectrum, and the capital efficiency when you think about the UMR rules coming in, that need to more efficiently deploy balance sheet and capital for traders is really, really critical. And so that listed, cleared, transparent model is really what we're looking to provide across our product innovations.
Very exciting stuff. David, thanks so much for your time. Appreciate you talking with us and laying out the plan.
Thanks for coming back.
Absolutely. David Howson, Global President of Cboe. I'm Oliver Renick, Market Overtime on the Schwab Network. Thanks for tuning in.